Singapore announced big plans to become a global crypto hub last year. But where do they stand now? Welcome to the Daily Forkast April 8th, 2022. I'm Megha Chadha of Forkast, covering all things blockchain. Recent moves to restrict crypto businesses in Singapore have sent a shudder through the industry. So are the city's plans in tatters, or could more regulations eventually prove to be a benefit? We'll take a look at that, plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the moves that are opening up the crypto space in Asia. In India, the launch of cryptocurrency exchange platform Coinbase has hit a bump in the road. Just yesterday, Nasdaq-listed Coinbase launched its crypto trading services in the country, allowing the use of the Unified Payments Interface, or UPI, a popular way for Indians to transact digitally. But in a rare departure from the norm, India's governing body for UPI, the National Payments Corporation of India, or NPCI, denied any association with the platform. In a statement, the NPCI said it is not aware of any crypto exchange using UPI. Coinbase later told users on a support page that it will not be able to offer UPI-based transactions. The Reserve Bank of India has repeatedly warned against cryptocurrencies, making financial institutions and banks wary of offering any related services. Over in South Korea, a pathway towards institutional crypto investments in the country may be opening up. Shinhan Bank, which is one of South Korea's leading domestic lenders, is testing out real-name cash-to-crypto accounts for a number of corporate investors. Corporations with the accounts will have access to crypto investments and trading through Shinhan's partnership with domestic crypto exchange Carbit. While such trading is not illegal, banks had thus far steered clear of offering such accounts due to the risks of money laundering. The bank says it is eliminating those risks by requiring corporate investors to entrust their crypto to Korea Digital Asset Custody, or KDAC, which is backed by Shinhan. The corporations being offered this service are all members of KDAC. And local reports anticipate that the move will make a big difference in opening up crypto investment options for corporates. South Korea working hard on building its crypto reputation. You can find those stories and lots more at Forkast.News. Meanwhile, could Singapore be on a downward spiral? Last year, Singapore announced a plan to become a global crypto hub. But recent restrictions imposed by the Lion City raised doubts on whether it is sticking to that plan. Forkast Jenny Ortiz dives deep into the country's approach that some may call anti-crypto, but apparently not for those tracking policies closely.
Singapore is known as one of the world's major financial hubs, and the country's announcement last year of plans to become a global crypto hub was welcomed by the industry. A report even cited Ravi Menon, the managing director of the Monetary Authority of Singapore, or MAS, saying the best approach to crypto is a strong regulation rather than clampdowns or bans. However, this year, MAS issued guidelines that restrict crypto companies from advertising in public and require users in Singapore to declare their identity and residence when making transactions. And just this week, the country passed a law requiring virtual asset service providers to be licensed if they want to do business overseas. And it seems these regulations are driving crypto firms away from the country. In December 2021, Binance Asia Services withdrew its application to the MAS for a license to operate and eventually closed down its operation in the Lion City in February. And last month, Singapore-based crypto firm Bybit announced the relocation of its headquarters to Dubai, which offers, quote, crypto-friendly regulations. But Danny Chong of the centralized yield tracker for crypto assets Tranches tells Forkast that Singapore's move was in line with its direction to develop the technology and institutional adoption before allowing widespread retail exploration of crypto in the country.
Singapore knows that, and it has to deal with a few things, which is anti-money laundering and KYCs and other kind of regulations involved, right? So by having a first step, first of all, to say that a license is needed, it's already saying that it's accepting the fact that crypto is here to stay, and hence is mapping out rules to deal with it.
Chong further explains that regulations are being put in place to protect investors as well as Singapore's image in the world.
There is the one end where you want to promote crypto, but there is also the other end that you need to ensure that Singapore's status as a major financial hub is upheld. By delaying kind of like a massive decision to allow certain or more entrants of players to come in and take bigger steps, is allowing time for mainstream and also allowing for institutions to come into grasp with what's happening now.
Despite some criticisms, Chong believes the country is well on its way to becoming a global crypto hub, and crypto-curious nations should look to Singapore as a blueprint.
The crypto development, I think, in Singapore is very right. The fact is, I'm speaking to a lot of different protocols. They are still developing here. I mean, it's a clear fact that Singapore has seen an increased number of not only investments, but actual population from the crypto world into Singapore.
For Forkast, I'm Jenny Ortiz.
And finally, Hong Kong has the highest concentration of Bitcoin ATMs per capita of any city in Asia, but are looming regulatory hurdles putting their future in doubt? Forkast Danny Park reports.
According to Coin ATM Radar, there are 147 of the machines which accept cash deposits to buy crypto held in online wallets. Bitcoin ATMs appeal to a growing base from crypto newbies to expats sending money back home. ATM operator Coin here told Forkast they also provide accessibility for people who don't have access to regular banking services, suggesting laborers who are paid on a daily basis could benefit. But Hong Kong's status as an oasis for the machine could be under fire as the city rethinks its approach to cryptocurrencies. Back in January, lawmakers pushed ahead on blocking retail investors from access to non-derivative crypto products. And things could go a step further if crypto is brought under a regulatory umbrella, allowing services to be provided to professional investors only. The city demands that such investors have a portfolio of at least 8 million Hong Kong dollars, which is $1 million US. And that could jeopardize the future for the ATMs, since they target users wishing to buy smaller amounts of crypto. However, Angie Lau of Coin United says that for the moment he remains positive that the machines aren't going away, even if retail investment usage is blocked in Hong Kong.
The detail of the policy hasn't been released yet, and we actually haven't heard anything about the ATM machine, but people, maybe they can still buy cryptocurrency via the ATM machine and actually use wallet from some other country.
But while Lowe says regulation is good, he also says that if it proves too onerous, the company could pull up stakes and move to other, more receptive jurisdictions. In the meantime, crypto investor Saravana Kumar told Forkast that both security and the ease with which conversions from fiat to crypto can be made are big attractions towards using the machines. We'll be keeping watch on what the future holds for them. For Forkast, I'm Danny Park.
And that's the Daily Forkast. And now you don't need to search for us. The Daily Forkast is being delivered straight to your inbox. Sign up at Forkast.News/newsletters. Thanks for watching. I'm Megha Chadha. Until next time.